Hello, my name is Jay Chauhan. I run a mentorship group called Angel Mentorship Group, which is on the Facebook. And also, I work with some lawyers and students and paralegals to try to assist them in terms of launching their practice or get to know a different area of law. And the group on the Facebook is open to a lawyer, paralegal, or a student, or even the public for information, because I believe that for the public also it's very important to understand the legalities in the legal situation, so they can protect their legal rights and enhance their position when there is a legal issue arising. And in my opinion, the legal issues are just as important in life, in society, as medical issues, but the legal system is a private enterprise system and you have to pay the lawyer, whereas in the medical system, you have the government pay for your medical bills, in Canada at least. Some of the members of our group are abroad and the systems are different, but our group is open to all the lawyers in any country. We have some members in India, in England, and other jurisdictions. So some of the issues that I talk about will be predominantly Ontario jurisdiction, but the principles of law will apply in other countries as well. So today I want to talk briefly about the corporate law and how you can launch a practice in corporate law. And an example of that one is learning how to transfer the shares in a small company. I'll talk in this video very briefly about the way the law schools are teaching the law and the struggle that a new lawyer has to go through for the purpose of trying to organize the thinking, the learning, and the experience to launch a corporate practice. So let's begin by talking about the share transfer in a small company. I had a situation of that kind recently, and I was helping a young lawyer graduate from the Osgoode Hall in Toronto, Ontario, Canada. And even after being called to the bar, doing the articling, there are a number of questions that arose, which I want to address and explain in this particular video. It won't be long, and I hope to do a seminar on that issue and hope you will join. But let's begin by figuring out who can transfer the shares in a company. The shares in a company by resolution can be done only by directors, and that part of the understanding is set out in the Business Corporations Act. And if you studied the corporate law in the school, then you know what the Business Corporations Act of Ontario says, and there are similar provisions in the federal statute also. So in Canada is a dual jurisdiction for the corporate law, and you can form a company either in Ontario or federally, but both have similar provisions. And so when you transfer the shares, essentially it is directors who transfer. So most people know, but many students have not even seen a minute book. And I studied, my education was in England at Lincoln's Inn and also in Ontario at Osgoode Hall. And when I graduated and was called to the bar in my practice in Richmond Hill, first time I saw the minute book was in the legal office, where you open the book and try to figure out where are the registers, where are the resolutions, and where are the resolutions for directors, and where are they kept for the shareholders, etc. So it's very often it's a totally new experience, and the students are not exposed to that. So that result of this arrangement of education is that the downtown practices, which are specialized departments, manage to get all the clients in the corporate law, and the suburban lawyers struggle to get the clients in that area of law, which is lucrative. So just by illustration, a lot of the small town practitioners end up doing areas of law such as immigration, family law, and real estate, because the exposure and the understanding of how to deal with the corporate law is not fully shown in the schools. So there are three different disciplines that you have to be aware of when you're dealing with corporate law. One is accounting principles, how does the capital gains tax work? And when you prepare a resolution to say that you will prepare a resolution to pay a person a salary instead of the sale of shares, you have to deal with the question of the capital gains tax or employee deductions if you write it as an agreement to pay the employee when a person is transferring the shares. So very often in a small company, you would have a situation where 2 partners or 3 partners are there and one of them wants to leave the company. So how do you arrange that? So these issues are first dealt with from the document's point of view by way of an agreement, firstly, to set out the number of shares that the vendor has, which is transferring to the shareholder who is going to remain in the company. And then there is a question that you have to figure out whether there's a capital gains tax or you're going to write a consulting agreement for the person who's leaving, who is going to teach the existing shareholders how to manage his portion of the skill that the current and existing shareholder must continue as a business person in the company. So both of these transactions have a totally different implications. The sale of shares has capital gains tax implications, and the employee contract for consulting is similar to the employee agreement, and therefore the cost of the payment is a deduction for the company, and for the person receiving the money is an income which he must report. Corporations have a different fiscal year, and the employees have a different fiscal year end, which is the end of the year. So there are 3 different skills that you must learn, and not only learn, but be able to exercise your judgment and advice in 3 areas of activity, which accounting very often is totally lost in terms of the understanding in the law schools, and therefore there are some firms that get very specialized in corporate law. But I think there is an opportunity for many of the practitioners in a smaller town to develop a corporate practice, but you have to learn these principles of tax and accounting for you to be able to practice this area of law. So firstly, in terms of documentation, what would you do? You need an agreement that sets out who is selling the shares and who is buying the shares. Simply doing a resolution is not sufficient because you want to set out the purchase price clearly so there is no problems. You have to know who is your client. In a corporation, there are always 3 people that you have to think about. The corporation itself, which has legal rights of its own. There is the purchaser of the shares, and then there is a vendor. In a very small practice, you may not have 3 lawyers to do all the work, and therefore you may end up doing the work for the corporation and ask your different shareholders and directors to seek independent legal advice if they want to, but you should get this done in writing. So very important that you follow the ILA principle of common law, where each lawyer must advise only one party and one legal right at a time. So you should never fail in that exercise, because if you do, you're not only in conflict of interest situation, but you can end up with negligence as well, which are 2 major problems when you're trying to deal with the question of the sale of shares. So the resolutions are then prepared, an agreement is prepared, you prepare the resolution directors, you prepare the registers to show that the existing shareholder, who very likely was a director as well, has resigned as a director. So you have to pass a resolution to that effect, and he tenders his resignation to the shareholders, and you should record that as well. You should do a reporting letter to make sure that your client understands and records what happened, because you don't want your transaction to be questioned later in terms of what your responsibility was. Very often you have to deal with an accountant, and I would advise that if you're the lawyer, then you have to get the advice in writing, confirm with the client that they've seen the accountant and that you're not responsible for the tax and accounting aspects of the transaction. And very often it's very difficult to just connect with the accountant. So the best thing to do is to tell your client to get this in writing, and then you have another document that is from the client or the accountant confirming that the proposed transaction of share transfer is okay from the point of view of the client, and the capital gains tax is is dealt with if required in that situation. But in terms of the understanding of how these resolutions are prepared, you can prepare a whole set of precedents. If any one of you want me to assist you in the mentorship group, then we'll be pleased to teach you how to do those transactions and carry out the documentation, and we'll help you with the precedents as well as the advice in terms of what to do. But this video is just general in nature and cannot deal with the details of any client that you might have. Hope this was helpful to you. And if you have any comments, please note them below in the Angel Mentorship Group video. And we look forward to seeing you in some of the CPD programs. Thank you.